First, we've got some breaking news here on BlackRock. Chairman and CEO Larry Fink just releasing a letter to shareholders talking about BlackRock's performance. This is the sort of annual letter here, but also commenting on the coronavirus for the first time. We really haven't heard from Larry Fink and on what has happened to the market. Some headlines and some quotes that stuck out to me. He says, Larry Fink, the world will get through the crisis. The economy will recover. And for those investors who keep their eye not on the shaky ground at our feet, but on the horizon ahead, there are tremendous opportunities to be had in today's markets. It's a sort of a long letter, and a lot of it focuses on Fink's focus and BlackRock's focus on the long term, saying keep that perspective. He says in his 44 years of finance, he's never seen anything like this. The outbreak has impacted financial markets with a swiftness and ferocity normally seen only in classical financial crisis. In a matter of weeks, global equity benchmarks fell from record highs into a bear market. Talks about the long term and how we're going to be very different, but does say, I do believe the economy will recover steadily, in part because the situation lacks some of the obstacles to recovery of a typical financial crisis. Talks about the central banks moving quickly to intervene in the credit markets, the governments acting aggressively to enact fiscal stimulus, and talks about how that is all going to bode well for the long term. Talks a lot about BlackRock's own performance, the fact that they've had 90% of their workers working from home remotely, and sort of the technological innovation that has made that possible. But just digging through this, we'll continue to bring you any headlines. Thought it was valuable, Wilfred, because we just haven't heard from Larry Fink really since the onset of this crisis.
Yeah, absolutely. And just to pick up on most of the passages you pulled out as well, he said these conditions were exacerbated by record low liquidity levels in U.S. Treasuries, which serve as a benchmark for pricing risk across the market. And then, as you said, commended the speed with which governments and central banks acted to address issues like that, saying their actions are likely to be more effective and work more quickly this time since they're not fighting against the same structural challenges as they were a decade ago, referring to the financial crisis. And I only got through the first 4 pages or so, but he did talk as well about some of the options BlackRock offers to their clients, and says over the last decade, investors increasingly recognize that portfolio construction, not security selection, drives the majority of returns. And I do think, of course, that's been important, because if you had a typical 60-40 portfolio stocks and bonds, that's what's protected you much more than if you happened to hold one stock that fell slightly less than the others, because it was such a broad range of selling. In the end of that section, he does go on to say, very few managers apart from BlackRock can offer our clients that full set of capabilities. That's slightly, of course, patting himself on the back, and many other investment firms would legitimately argue with that statement. But I do think that's kind of interesting, and he talks up the benefit of their acquisition of iShares, of course, in the financial crisis, and how that's helped them through this and offer clients the ability to offset the declines fairly cheaply, Sarah.